Hello friend, welcome back to our new video again. Today our video topic disability insurance. Disability insurance basis. Disabling injuries affect millions of Americans each year. Disability insurance, which complements health insurance, help replace the lost income if an individual is unable to work due to disability. There are three basic ways to replace income. Number one, employer paid disability insurance. There is required in most states. Most employer provide some short-term sick leave. Many larger employer provide long-term disability coverage as well, typically with the benefits of up to 60% of salary lasting for a period of up to 5 years until the age of 65, and some cases extended for life. Number two, Social Security disability benefits. This is paid to workers whose disability is expected to last at least 12 months and it's so severe that no gainful employment can be expected. Number three and last, individual disability income insurance policies. Although limited replacement income is available for workers under some circumstances from workers' compensation, if the injury or illness is a job-related auto insurance, if disability results from an auto accident and Department of Veterans Affairs, for most workers, even those with some employer-paid coverage, an individual's disability income policy is the best way to insure in the event of disability. Workers who buy a private disability income policy can expect to replace from 50% to 70% of income. Disability benefits paid out in the individual disability policies are not taxed. Benefits from employer-paid policies are subject to income tax. Types of disability insurance. There are two types of disability policies: short-term disability and long-term disability. Short-term policies have a waiting period 0 to 14 days with a maximum benefits period of no longer than 2 years. Long-term policies have a waiting period of several weeks to several months with a maximum benefits period ranging from a few years to a lifetime. Disability policies have two different protection features: non-claimables and guaranteed renewables. Non-cancellable means that the policy cannot be cancelled by the insurance company, except from the non-payment of premiums. This gives the policyholder the right to renew the policy every year without an increasing the premiums or a reduction to benefits. Guaranteed renewable gives the policyholders the right to renew the policy with the same benefits and not the policy cancelled. Not cancelled by the company, however, the insurance has the right to increase premiums as long as it does not for all other policyholders in the same rating class. There are several options and factors to consider when purchasing a disability policy. Number one, additional purchase option. The insurance company gives the policyholder the right to buy additional insurance at a later time. Number two, coordinations of benefits. The amounts of benefits policyholders receive from their insurance companies is dependent on other benefits they receive because of the disability. The policy's specific or target amount a policyholder will receive from all the policies combined and will make up the difference not paid by other policies. Number three, cost of living adjustment COLA. The cost of living adjustment increase disability benefits over time based on the increased cost of living measured the consumer price index. Policyholder will pay a higher premium if they select the cost of living adjustment. Number four, residuals or partial disability later. This provision allows the worker to return to work part-time, collecting a part of their salaries and receiving a partial disability payment if they are still partially disabled. Number six, return of premiums. This provides returns of insurance companies to refund part of the premiums if no claims are made for a specific period of time declared in the policy. Number six, waiver of premium provision. These clauses mean that the policyholder does not have to pay premiums on the policy after he or she is disabled for 90 days. Factor affecting the choice of disability policy. Number one, definition of disability. Some policies pay benefits if workers are unable to perform the customary duties of their own occupations. Others pay only if workers are able to perform any job suitable for their level of education and experience. Some policies define disability in terms of workers' occupations for an initial period of 2 or 3 years and continue to pay benefits only if they are unable to perform any occupation. Own occupation policies are more desirable but more expensive. Number two, benefits period. The benefits period is the amount of time policyholder will receive monthly benefits during their lifetimes. Experts usually recommended that the policy pay benefits until at least age of 65, at which the point Social Security disability will take over. Young people may consider buying the policy covering lifetime benefits because it will still the relatively inexpensive. Number three, replacement percentage. A policy that will replace from 60% to 70% the total taxable earning is advisable. A higher replacement percentage, if available, is more expensive over the source of income should be evaluated before deciding how much disability coverage is needed. Number four, coverage for disability resulting from either accidental injury or lying. An accident-only policy is less expensive but does not provide adequate protections. Ideally, both accident and illness coverage should be purchased. Number 5. A cost of living increase in benefits policy may not be benefit for a decade or more should keep pace with increase the cost of living. Some companies also offer indexed benefits keeping pace with inflation after benefits payment design. Number 6, a policy paying residuals or partial benefits. This type of policy is available so that people can work part-time and still receive benefits making up a loss of income. A standard feature is some policies and added to the rider others. A residual benefit policy pay partial benefits based on the loss of income without an initial period of total disability.